In this case, this is a really big triangle. These can operate as tops and bottoms. If we look at this pattern and then we take it and we look at a one-day chart, what we see is that this is very, very close to a breakout. So if this does break out above, 48.50, 48.75, certainly above 49, we could see, apparently or obviously, a move above those May, June highs, which would obviously put us in a whole different ballpark for the NASDAQ. But being that interest rates are probably going to go up, sooner rather than later. That's going to be the next thing. Technology, which is packed into the Nasdaq. Technology stocks get hit hard because they rely on financing. So and that's a business cost. So that's the Qs. I got a couple other things, and then we're going to wrap this up. Let's pull up XLF. XLF is the ETF for financials. So if you want to, instead of buying an individual, bank stock or, brokerage or whatever, you just want to buy a basket of financials, XLF is the way to go. XLF, again, what do we see? That triangle, that consolidation formation. And again, we saw little marker over here. We saw the breakdown below that consolidation formation. A couple different things can be happening here when we see these breakdowns. Again, validating that pattern, that decrease in volume. But a couple different things that can happen with consolidation formations that break like this. One thing that can happen is we see a breakdown, and what this does is it shakes out the weak hands that are holding the stock long. It gives the strong hands an opportunity to buy the stock cheap, and they push prices up. It also sucks in shorts, and these guys who are going short this, basically the stock goes down, they make money. As the stock moves up, these guys, they're in a losing position, and the more the stock moves up, the more money they're losing. So they need to cover their short, which means they need to buy the stock back, and that adds more fuel to the fire, meaning more demand, which pushes prices up higher, which causes even more shorts to be in more pain, and it's a short covering, a short squeeze. So that's one thing that can happen. The other thing that can happen, obviously, is that this is just a breakdown and it kisses the channel goodbye or kisses the pattern goodbye, and that's a great time, a real low risk entry to short this, and then they drop, and it's a low risk entry because you can short it right in here, and you can say, well, if it goes above this level, I'll cover my short, and you're out of it. So XLF, in my opinion, is a pretty decent short. I'm shorted via September contracts. I've got September puts on XLF. I've got September puts on the Qs as well, and a couple other things, but I'm not going to get into all that right now. Maybe I'll update my site on what I'm doing there. Let's take a look at our trusty 3C indicator, and what do we see here on 3C? Let me zoom in a little bit. We see a negative divergence. This is a leading divergence. This thing is like just making new lows, way below the level over here where the stock was, at its ultimate lows. That's pretty scary. And personally, I just could not be a buyer of financials at this point with everything that's going on. And here's a 15-minute version, and if we zoom in, what we see, of course, higher highs, and this thing is just making lower highs. So this signals to me that this is distribution. That does not mean it can't go higher. Of course, it can still go higher, but it means it's going higher on distribution, and that means I wouldn't want to be a buyer of that. In my opinion, maybe it makes it to 2150, maybe 2175. What would change my mind about this, and what would change the whole ball game, is if we see a breakout, above this level over here, like 2275 or something. If that happens, breakout above 2275, this thing, just on technical buying alone, could run up to 2550 real easy. But my gut feeling says that these July lows are probably going to get tested, maybe broken. Let's take a look at USO. USO is what I use as a proxy pretty much for oil. It's the United States Oil Fund ETF. So if you're not a commodities trader and you want to trade oil via stocks, you can buy USO ETF. You may remember back in late June and July, we were all over this thing. I think we called this thing within like a day or 2 days, and this broke down pretty hard. Anyway, I've been looking for a technical bounce. I thought it was going to come a lot earlier than it did. The Georgia-Russia crisis pressured the euro. When the euro went under pressure, of course, the US dollar gained, oil slipped. And I can show you the dynamic really between oil and the US dollar. Why don't we just do that real quick? Let me pull up X-Oil. What X-Oil is on Warden anyway is light sweet crude oil, and you can see it's at 114.59 right now. So that's light sweet crude, and I'm going to pull up a comparison symbol, the US dollar index. What you'll see, I'll pull out a little pointer here, what you'll see is an inverse relationship. So in green, that's oil, in red, it's the dollar index. So over here, we see oil going up, you see over here, the dollar going down, over here, in red, the dollar going up, over here, in green, oil going down. It's an inverse relationship. So basically, the technical bounce that we were looking for in USO was delayed a little bit because of the Georgia-Russia crisis, but once that kind of settled down a little bit, we got a pretty good bounce here. I mean, we came from what, down here at $89 and ran all the way up to about 96, so that's a pretty darn good move for a couple days. So I hope you banked it, because the dollar had a real nice move up on Friday, and oil got hit pretty hard. So I don't know what's left here in the tank. I'm going to be watching this pretty close, but the dollar is making a real nice comeback. And last, we're going to just take a real quick look at the dollar here. And to put it in perspective, let's just look at like a 9-day chart, and we can see, this is 06, and you can see how just nasty this downtrend has been for the US dollar. Now, if we draw a trend line, something, actually I should use a 5-day chart, make it a little bit cleaner, but if we draw a trend line, let me use a 5-day chart. You can see it just blasted right through that trend line. If we use a 9-day chart, and watch what happens over here. Now I'm going to go to a daily chart. What do we see? A real clean breakout of the US dollar above the long-term downtrend line and a pullback. This is a real typical technical type of setup or technical behavior that we see, a breakout above a long-term trend line and then a pullback to that trend line. So the US dollar could possibly consolidate a little bit down here, and if that happens, of course, then oil has a chance to run a little bit more. I could see, this consolidating, possibly even falling back below this trend line, maybe coming down to the 75 area, maybe back down here where there's some support around $74.95, $75. I don't know if it goes that low. All things considered, we'll have to see what happens. But ultimately, with the elections coming, what's going to happen undoubtedly is, all the talk is going to be about drilling, alternative energy, all kinds of things, taxing oil companies, everything. But it's not going to be good for oil. It's going to scare investors off. And, of course, OPEC can counter that, and they can raise. But in the end, the Saudis have a lot of influence, and the Saudis, are beholden to the United States for a lot of things, including security. So they cannot go too far with it, and they have to kind of play ball. But that's it for tonight. I'm Brant from TradeGuild.net, trade-guild.net. Slide on by to the website, check it out. We've got a lot of good things over there. There's a tag board. We got some live traders over there all day. You can ask some questions, shoot me an email. And of course, I'll set you up with my indicators, my custom indicators that you can try on Telechart or Blocks. The only thing is, I'm a Warden, Telechart, and Blocks affiliate, so I appreciate using the links on my site. And that'll do it for tonight. Thanks for watching.